Welcome to the Southwest Florida Real Estate Update, hosted by the York Group of Downing Fry Realty. Our show will bring you the most up-to-date information on the local real estate market, presented by leading experts in the field.
Welcome to the Southwest Florida Real Estate Update. I'm Morgan York with the York Group of Downing Fry, and today we're joined by our host Jim York and his guest Robert Slaughter, Mortgage Sales Manager at U.S. Bank.
Thank you, Morgan, for the introduction. Well, Robert, thank you for coming on the show today. I know it's been a while since you've been on the show, so for our viewers, just tell them a little bit about your background in the mortgage business, which is pretty extensive.
Sure. So I came down to Southwest Florida about 27 years ago. I've been working in the mortgage business ever since, and I currently am a branch mortgage officer, which means that I have 5 loan officers that work under me, and I also originate loans for Southwest Florida.
Yeah, I know you've been doing our business for at least 20 years. I've been in Naples for 25 years, so compliment to you. You're really thorough and got a good handle on the mortgage business. For today, let's just talk about what's going forward in 22 and what changes we've seen from 21 going into 22.
Yeah, so I think the biggest things we're prepping for is, so we've had an amazing 18-month run on low interest rates, people refinancing, everybody that could refinance has been refinancing. But I think going into 2022, what you're going to see is so the MBA expects the refinance business to go down by about half. But they expect to have a pretty continued strong growth in the purchase sector. So that's really what I want to focus on for 2022.
And then, I talked to some people last night. I was at a meeting, okay, and there were a few mortgage people there, and they were saying that they have all these pre-approval letters out, but the people can't buy homes because the inventory is low in Southwest Florida. So maybe tell our viewers, if they do get pre-approved, how long is the pre-approval letter good for?
Yeah, so a typical pre-approval letter is really good as the age of the longest document. So that would be the credit report is good for 120 days from when it's pulled. So that would typically time out your pre-approval letter. And I have the same thing. I have people I pre-approved back in the spring that still haven't found property. But it's really not hard. After 120 days, I'll go through, I'll update documents. As needed, I'll pull a new credit report, and then I can revise the pre-approval. Once you get past 60 to 90 days, most of the sellers want to see a fresh pre-approval with the fresh credit report pull date as well.
So we're going into next year, and there's new tax returns for 2022. So if they've been approved for this year, depending on the time of the year, when will they have to supply their newer tax returns?
Yeah, so W-2s will be available usually at the end of January is when we start asking for W-2s. Tax returns run typically into that April 15th. But we have a lot of people in Southwest Florida that just file extensions. And so we don't necessarily need fully new information about a borrower, but it depends on the situation, what we'll look for. But the biggest dates are the January 31st and then April 15th in a traditional year. Last year not being a traditional year because of some of the COVID issues.
So the key is for our viewers that are buyers or even sellers to make sure they're in communication with the loan officer if they're getting a loan, to make sure everything's updated within the time period that a pre-approval letter is good for, right?
Yeah, correct. And also I feel, I just took feel to the phone call on the way here where, somebody's car was, in the repair shop, and he was asking me about, buying a new car and how that would affect his pre-approval. So we kind of talked through that. I was able to look up numbers and everything was good, but would much rather find out those things as borrowers are thinking about it rather than, reacting to it once they're under contract.
Yeah, and the taxes have gone up too in Southwest Florida, but because the appraised values are more. And I see the homeowners associations are starting to raise prices.
Yeah.
Also, insurance has gone up drastically
Yeah,
too.
so it's between insurance and flood insurance as well. We're seeing, higher numbers than I'm used to. That's the bad that comes with the higher home values, is the increased cost of home ownership.
And we were talking before we got on the show here about adjustable mortgages. You see some spike in that going forward?
So for the last 18 months, almost everything we've done has been on a fixed rate mortgages, and fixed rates are still, very attractive. We're looking at a 30-year fixed rate. We're looking anywhere from the high 2% mark to the low 3% mark in rate. But I think next year we'll start to see some creeping of 30-year fixed rates into, I'm estimating somewhere in the mid threes. And so I think there's going to be a resurgence of people interested in the adjustable rate mortgages, a 10-1 ARM, which is fixed for the first 10 years, and then we'll adjust annually after that for the loan term of 30 years. You're typically seeing about a 3/8 to a half better rate using a 10-1 ARM versus a 30-year fixed. So I think we'll start to see more of those alternative products come forward, where people will be asking questions about, what can they do outside of just a 30-year fixed rate mortgage.
And then tell our viewers a little bit about portfolio loans that you do, because some people don't know what that really means.
Yeah. So at U.S. Bank, about 60% of our product is portfolio product. Typically, that would mean a loan size that's higher than the Fannie Mae loan limit. So there's an agency loan limit of $647,200. They just raised it here for next year. But typically, if we get loan sizes above that, or if there's another reason, like a new condo or a condo maybe with some issues that wouldn't be available over in for delivery to Fannie Mae, would be a portfolio lend. And I think what we're going to see is more a rise in that level of portfolio as people kind of have specialized needs.
Mm-hmm. And tell them about those loan limits that goes to a jumbo mortgage after that.
Yeah, so
some people might not know that.
Yeah, so the government, quasi-governmental, kind of sets what they think the top end of a middle class mortgage loan amount should be, and so we were talking about it when you and I,
years ago,
started working together years ago. It was in the $100 and something thousand range, but so they just increased it for next year. Strong home appreciation, so they raised it all the way to $647,200. But you'll see, so above that, if a bank wants to do a loan or a lender wants to do a loan, it can't be earmarked for sale to Fannie Mae or Freddie Mac. It's just a portfolio product that they lend off of their balance sheet and service off of their balance sheet.
And how does that affect investment people that are investors?
So there's as we get into portfolio, there's a little more limit on what true investors can qualify for, mainly due to loan size. But we have different products. I just was talking to somebody about a investment condo, $1 million for purchase price, and we're going to do a $1 million loan against that condo. So he wanted to just put 20% down, but I was a little limited on what I could offer, so we had to kind of restructure a little bit.
And what's the difference between if a person's going to live here year-round versus they're going to be seasonal in the loan, if they're trying to get a loan?
So that's a great question. A lot of it's just kind of, makes sense, right? If they don't have any property down here and they're buying a property and there's not a 12-month, rental already in place, we'll generally consider that to be a second home. If you seasonally rent that second home, that's fine. We kind of use the benchmark of do you intend to use the property as a second home at some point during the year, right, and then we're good with it. It gets a little more complicated if you have a second home down here and you're buying a new second home. Right. We're going to want to know a little more explanation of why. Is it because the new second home's bigger? Maybe you're closer to retirement. But a lot of it is just making sense of the situation.
And that it can affect your rate then too.
Correct.
Right, so that's another thing.
Right, correct. It can affect the rate, and so primary residence and second homes are really set at one interest rate, and then true investment properties, the rates generally about a quarter to a half above the rate for a primary residence / second home.
And first-time home buyers, are there any down here because the prices have gotten so high, or are you seeing any?
Yeah, we still see a mix of first-time home buyers. A lot more have gone to kind of the entry-level condo down here, but we still have through the Florida Housing Bond Program, we still have a 3% program where Florida Housing will give a forgivable second mortgage of 3 or 4% of the loan amount.
Wow.
So basically, you can get in with all your down payment covered, and then some of your closing costs covered.
Is there a limit to that too? There used to be, right?
Yeah, it's really depending on the scenario, but it's mostly that they're looking for people that haven't owned property in the last 3 years, and they're also looking at income limits in Collier County. I think income limits are going to be somewhere between $120,000 and $140,000 for a family income.
Lot, yeah. So,
Yeah.
Bill, so before we end the show, would you just tell our viewers if they're going to get a pre-approval letter, what do they need to provide to the bank?
Sure. So it's going to be dependent on how your income and your cash flows is coming from, but general rule of thumb is 2 years of W-2s or 2 years of tax returns or both, and then 2 months of bank statements. That's really that gives me 90% of the information usually that I need in order to work out a pre-qualification for a borrower.
And do a credit check too, right?
Yeah, we'll pull credit. We pull it at our cost, so there's no cost to pre-approve. To look at that and kind of structure. If I have to talk to an underwriter about it, I will, or I just kind of apply standard underwriting guidelines. 27 years give me some knowledge of.
That's what I was going to go at. But a lot of people that we talk to, whatever age they are, they think that because pulling a credit report from you can lower their credit rating over time. That's not necessarily true, right?
So we can actually do a soft pull, which doesn't count towards credit rating and a pre-qualification. It can have a minor effect if you have people doing hard credit pulls. It's just kind of part of the process. If I know if somebody's just had the credit pulled and they know what their scores are from another lender, I don't necessarily have to pull credit to kind of advise and set up the product. I always warn people, if you haven't provided income or asset documentation, you really didn't get pre-qualified. You just have somebody looking at what you say and basing it on a credit report.
Right. Well, I appreciate you coming on the show today, Robert, and thank you for all the help that you've done for our team over the years, and we're continue to look forward and happy New Year and happy Christmas. So
thank you, Jim.
Thank you for tuning in. We'll see you next week. Thank you.
Thinking of buying or selling a home in Naples, Marco Island, Bonita, or Estero, Florida? Think of the most experienced York Real Estate Group, associated with the #1 brokerage in Southwest Florida, Downing Fry Realty, which produces yearly real estate transactions of over $1 billion. Jim, Michael, and Morgan make up the York Real Estate Group of Downing Fry Realty, with over $275 million in sales transactions, along with offering over 25 combined years' experience in the local market. The Yorks can offer the experience and trust you need in a realtor. Call them today at 239-273-6727 or visit their website at www.naplesyorkrealestate.com.